Alternative assets appear to be a house of cards. I remember using that same terminology back before the tech bust about 25 years ago. I was maybe a little bit early back then, but the house of cards, well, it did collapse. The more I read about alternative assets, the more I scratched my head and asked, how is Wall Street getting away with this? In the end, I believe the small investor will end up paying dearly for investing in these alternative assets. I learned something new over the weekend. A company called Hamilton Lane Private Assets can buy stakes from other holders at a discounted price, but then they can magically increase the value to the net asset value. Now, this also reminds me of the mortgage crisis in 2008 with collateralized mortgage obligations, which were better known as CMOs, that also had some major difficulties. Hamilton Lane Private Assets can disregard the discounted price they paid, no matter how they paid for it. And this is what surprises me. Even if it was in a competitive auction, and again, they get to mark it up to net asset value. It just boggles the mind. Now in 2024, there were $162 billion in secondary deals with an average discount of 11%. My question is, how can they magically create $18 billion of value on these secondary deals? The incentive fees that private equity firms like Hamilton Lane earn, they range from 10 to 12.5%. Now, if it sounds complicated, it is. And if you don't understand something, you don't understand an investment, you should not be investing into that investment, no matter how simple your broker tries to make it sound. The greed on Wall Street appears to be running rampant. I would highly caution investors to avoid any type of private equity or private income, bonds, anything private. Keep it out of your portfolio. I'm Brent Wilsey with Wilsey Asset Management. If you like these videos, be sure to give it a like or comment, and feel free to check out our other YouTube videos and weekly newsletter for the latest economic news, expert analysis, and market insights.